What's up, guys? This is Tevin from Simple Forex Options, and boy, do I have a treat for you guys today. I'm actually the indicator I'm going to be talking about. Of course, is going to come along with a free strategy. There's really no way I can talk about it, of giving my input on it without actually give you guys a strategy on it, because my input on it has a strategy attached to it. So I pretty much only use it in this certain way that I'm going to explain to you guys, and you guys are getting it all for free. So all of these free lessons, man, I'm gonna tell you guys right now, do not take it for granted, because a lot of times people can tell you how to use certain indicators, but they don't tell you successful ways that they've probably used, the most successful ways that it can be used. You see what I'm saying? That's one of the things that one of the biggest struggles that I had when I was first learning how to trade. A lot of times I had to learn a lot of stuff through trial and error, because I would look at videos and look at certain stuff and learn about certain indicators, but then I would be wondering, like, what is the absolute best way, the best settings for this indicator, or for this setup, or whatever it may be. When should I take it? When should I not take it? All of these things, they play a factor into a trader's system. And if you can set somebody up to where they can consistently do something and get consistent output on it, then you put them in a pretty good position. But what we're going to be talking about today, and let me move this over just quite a bit so that you guys can see better. What we're going to be talking about today is the CCI indicator, or in other words, the Commodity Chain Index. This is commonly used as a momentum oscillator, but it's a very strong momentum oscillator. It's indicative of overbought and oversold areas, and it's also used to determine or to spot trend reversals. Now, a lot of the ways that people use it, they really just use the CCI within itself. If you go right here, this is what it looks like right here. This is what a normal commodity chain index looks like. As you see, the period is already set to 14. This is the normal way that you see people use it. Now, me personally, I use it in a totally different fashion, and I'm gonna show you guys what I'm talking about. This is a strategy, and this strategy will probably be one of the most profound things that you see on my YouTube channel. So you're hearing it from me first. People's probably going to try to copy it or whatever it may be, but you're hearing it here first. And of course, people have similar setups and stuff like that, but this is the way that I commonly use it. What you want to do is you want to take you want to go to your settings. You want to change this to whatever color you choose. It doesn't really matter. You could put a blue, red, green, whatever it may be, but we'll just leave it at yellow, the color that it's at right now. And what you want to do is you want to put this period at 20. Now, you could put it higher. The higher, the better. It gives you more indicative view of the trend. Now, mind you, if the commodity chain index is below this zero line, then that means it's on a downtrend. If it's above the zero line, that means that it's on an uptrend. Now, the thing that makes a commodity chain index so good is because when it crosses over that zero threshold, then it's giving you a view of where the trend is going to go. And what a lot of people commonly use it as is that, let me remove this, sorry about that. Okay. What a lot of people commonly use it as, they just use it as overbought, oversold areas, and also trend reversals. So for example, you see right here, we're looking at this pair right here, and as you guys see, when you see it goes right here, it drops below, bam, it's indicative of a downtrend. And you see, this is crazy. Notice this, it crosses below the threshold before this big drop happens. So you actually could have got in on this before the big drop actually really took place. So that's just something really to take note of. This is why it's such a good indicator. This right here is not a crossover, it's a false crossover, but most people will perceive it as being one if they got it beforehand. As you guys see, these are just crossovers, the whole nine, the crossovers. But this is not the interesting part, because like I said, people use them as oversold and overbought areas. And what I commonly like to do, let me take this down to the matter of fact, we just leave right here. What I commonly like to do is I like to add another CCI up here if I can. You want to add two, and what you want to add, bam, two lines. There you go. You get two of them, and what you do is set this period to either 3 or 5. So in this case, we're going to set it to 3, and we're going to have it as a line. And we're going to change the line to, let's say, red. That looks very confusing. That looks confusing. I want something that'll be kind of like light on the eyes. All right. So I know you guys are seeing a whole bunch going right now. Please bear with me. Show me some patience. All right. So let's stress this out. If you guys notice, there is a resistance point and a support point when you use a certain value or a certain asset. As you guys see, we see down here, everything reverses at 300 or around this area. Everything reverses on this is like literally a support and resistance for the commodity chain index. So if you guys look right here, this is where we have our line, and we're gonna make this our support. Change it a different color, so yep, so it can be easier to see. And right here, we're gonna make this our resistance. Bam, there we go. All right, and we're gonna change this to red. Now, one thing to keep in mind is that this does not mean that this is a support resistance on the real charts. This is a support and resistance for the commodity chain index. Now, because it's on a 3 period, if you were to change the period to make it higher, then the resistance and support would alternate. That would change. But as you guys can see, it of course when you stretch it out, it breaks out. But we have to keep it within here because free stock charts. I use this on MT4, so free stock charts is much different than what I'm using. So if you were to slide it down, as you guys see, it changes of course over time, and you want to keep adjusting it. But as you guys see, you can see clearly what your support and resistance areas look like. Now mind you, you don't enter in on signals there. These are just to indicate to you where the market is trying to change directions or go. The way you supposed to enter signals, and because these are slow sideways markets, it'll be hard to tell. If you see that the commodity chain index is below this yellow line, and you see a spike that goes above the resistance area, this is a strategy, guys. I want you guys to see this. This is a free strategy. I shouldn't even be giving this out for free, bro, because I actually use this. So I don't like giving out free stuff because I know how people could just get out of line with strategies and start scamming people. But yeah, this, if you see it, it's below this yellow line, I mean below this middle threshold or this middle point, and you see that it's still below this line, but you see that the markets shoot above this resistance area. This is not a true resistance area. It is, but then it's not. It's actually a retracement area, which means that what the markets really want to do, they want to come back down and continue on the trend that they were previously doing. So for example, if you see this, bam, crosses up, and you see it right here, the moment that you see this happen, this little setup right here, you can just get in for a sell option on the next 2 candles. Now I don't use it that way. I do use it that way, but I use it on longer time frames. But yeah, you can get in on a sell option for the next 2 candles, mainly because you know that it's a very overbought area, but you also know that the markets, according to the yellow line, that is still in a downtrend. And let me make this a little bit thicker so that you guys can actually get a better view of it. Yeah, so you know that the markets is technically still in a downtrend. So what you're looking for is for it to go up here, bounce off of this level, and then come back down. So if you see right here, this candle finished in the bearish, this candle finishes in the bearish, and of course it opened up at 1.1763. and it closed at 1.1750. That's almost 13 pips ITM if you had got in on the end of this candle or the beginning of this candle, or even if you had got in for a 2 hour expiry, it would have been the same thing. You would have came out with the finish of, I didn't look at the proper finish for that one. Yeah, I got it about right. 10 pips. And yeah, it was came out about 13 pips, 13 pips ITM. So that's just one thing to keep in mind. You can see that as the overbought area, oversold area. So like right here, because the yellow line is below that middle threshold, you will not be taking anything but sell options. Even if it bounces down here below, you don't want to take any of these. Now, the only reason or the only way I would take something if it bounces below is if it crosses above this middle threshold. But I would say don't do it. It's not safe. It's not something you can really trust. So yeah, as you guys can see, it's still in the sell. And in the moment that it comes above or hit this resistance area, you could get in on the sell option. I would suggest 2 candles away from whatever time frame you use. I would suggest 2 candles away from where it's at. Now, here's another way that you can use it, which is the way that I most commonly use it, but I use it, of course, on longer time frames, is that you're looking for a zero crossover of the threshold when the first commodity chain index is above or below. And what I mean by that is that, let's say that this is below, right? What you want is for it to cross over the zero threshold area. When it crosses over that, it's very, 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 very likely that the very next candle will finish the same way as well. Let's take you another example. This is fighting a little bit, and bam, you get above here. You can still take a sell option, but me personally, I don't like to do that. I like a little bit more confirmation, but you can do that. That's not a problem. You see it comes down here. Okay, you can see that that's a bearish candle, but then we see it crosses below, in between these candles, or on this candle actually, we can see that it crosses below or connects with the zero threshold while it's still in the sell. When you see this is a good sign that the very next candle will more than likely come out bearish. These examples are all over the place. Same thing right here. As you guys can see, it's above the zero threshold. And now, mind you, this is actually, I'm gonna show you guys real quick. This is a perfect example of why I don't always take it when it goes right above or right below. Because you guys can see right here, it actually lingers up here for a minute, for a couple hours. So that's why, I know you guys are thinking that it's probably the best way to use it, but the overbought and oversold area is just to let you know that the price wants to reverse, but it doesn't tell you when it's going to reverse. As you guys can see, it stays up here for a couple hours. But when it crosses below the zero threshold, the yellow line is still below. Cross below the zero threshold, the very next candle comes ITM if you were to get in on sell option. So like, man, these chunks, they're everywhere. And I'm going to give you guys, I'm gonna actually put some arrows down so you guys can actually see what I'm talking about. So right here, we have a call option. All right. Let me see. This is above. We have a call option. We see right there. Next candle comes ITM. That would be, I'll put this in the wrong place. All right. This will be an ITM. Bam. Right here, you have a call option. Next candle, it does come bullish, but it didn't come by that much, but it still comes bullish. So if you had got in on the ending of this candle, beginning of this candle, whatever it may be, it'll probably be by a couple pips. Let me see, open last. Yeah, it'll be by a couple pips, but still, it would technically be an ITM. But I don't know, that'll be on the edge, because that really just depends on what kind of strike you get. But yeah, like I said, same thing with here. Now, as you guys can see, this does cross above the threshold, but it's above. It actually goes by our rules. Bam. That candle right there would be an ITM. And all of these, the arrows is behind the candle that would be an ITMs, just to let you guys know. So as you guys can see, it crosses below the threshold. Now that it's crossed below the threshold, you let it go up. It'll be up for a couple hours. As it comes back down, you guys see it right here. Bam. You get in on this candle. Right here. Which is this one. That will finish ITM. You get in bearish, finish ITM. Same thing. This is still below. Another example. Bam, happens right there. Get in on that one. Finish ITM. Same thing. All over again. All over again. Now, mind you, it goes above that overbought area. And, of course, some people get in on that. Some people use that. I don't suggest that. I suggest while it's still below, you let it come down here. Bam. I'm telling y'all, dude, this is a gem. I mean, I kind of feel bad giving it out because, I have tons of indicators that I use on my charts. That's one thing that's made that clear. I use tons of indicators. That's just my nature. I have probably 12, 15 indicators on each one of my charts, and I use about 3 to 4 different time frames. So I have a lot of stuff that I'm looking at to be able to make my decisions for confirmations. But this right here is a really, really, really strong indicator for me. It's a strong usage for me. And I know some people, they don't even mess with this, but I mean, I think it's one of the very best things to use because one, it responds quickly, it happens quickly, and then two, if you are patient, and then if you're quick at the same time, you can get you some really good opportunities. I do not really suggest this on smaller time frames, even though it can be used. I suggest it on an hour, 4 hour, and a daily time frame. In my honest opinion, I think it works better on a 4 hour time frame. That's my honest opinion. And you take the expiry either 4 hours to 12 hours away, and that's just my honest opinion. If you do it on an hourly time frame, you could do it from 2 hours, even more. But I would suggest if you do it on an hourly time frame, you want your expiry to be an hour or 2 hours. So if you are waiting for the crossover, you want it to be on the very next candle. If you see the overbought area, that's when you want to take longer signals because it may take longer for it to come back. But yeah, as you guys see, it's still below. Bam, that will be ITM. It crosses above, but it doesn't hit that overbought area. It doesn't actually give us this right here. So you don't want to mess with that. Comes above, crosses back below, but it doesn't hit the overbought area. You really don't want to mess with that. Even though you could get an ITM, you get an OTM on this one, but you get ITM on this one, but it's not sufficient enough. You see what I'm saying? So as you guys see, crosses back above, and as it crosses above, you guys see it doesn't reach above this line. This is why you have to be patient, because it doesn't reach above this line. Now you can get in on a crossover too, the yellow line crossover the threshold. A lot of people actually use the CCI for that, and I've used it too as well, but I more so use it for a longer term trend, and I really use it for anything like short or intermediate. But you can use it for that, just to make that clear. So yeah, as you guys see, CCI goes above. There's nothing. It doesn't cross over the threshold, doesn't touch it. And as you guys see, it comes and it crosses above the threshold, but you wouldn't take that because the yellow line is still below. Even though it still comes ITM, you wouldn't take it. So as you guys see, it's above and it never crosses below. Now you finally have a setup. Bam, you see it comes down, hits this line or this oversold line or that support. Bam, right here, crosses above. That's our setup. Right there. Bam. ITM. Same thing. Comes down, hits that threshold, hit that oversold area, comes back up. And see, look, that's what I was telling you guys. You see this over here, this little stuff right here? This actually hits the oversold area, the little CCI support line. But none of these would have came up to come ITM. And that's why you don't want to do that. You don't want to make that kind of decision. So that's what I'm saying. Keep that in mind when you're making these decisions. So yeah, as you guys see, bam, comes ITM. Same thing right here. It's still above, and it's not that much above, but it's still above. Bam, right here. And if you get in on this candle, let it come right there, but it came ITM. Over and over again, just the same thing. It's like clockwork. All right, as you guys see, it crosses below, and there's no setup. Crosses above, there's no setup. So this is a perfect example of what I'm talking about. Of course, I can do this for like a whole week or something like that, but that would just be childish. I think you guys get the point of what I'm talking about. Now, mind you, my CCI indicator and what I'm using doesn't look anything like this. I just set this stuff up manually so that you guys can see. So if you use free start charts or anything, this is probably how you would have to have yours set up. Of course, this right here is harder for me to see because the one that I use is just a little bit different. But I would suggest that this works just fine. You can see everything just fine. Actually, you can probably see it better because it's more stretched out and much larger across the screen, so you be able to catch these opportunity. But yeah, I just randomly started right here. Like say we started right here on the 8th, and mind you, because some of these comes up throughout the nighttime and the hours that you're not on your charts trading, it's very rare to find opportunities with these, and this is why it's so good because in a day's time frame from like from the 8th to the 9th, you would have got 1, 2, 3, 4, 5 signals, right? But based off of the times that people trade, you would have only been woke. Let's say if you get up at 5 and starts trading, you'd only got 3 signals throughout the day, and that would have been from 5 a.m. all the way up till 10 p.m. at night. You see what I'm saying? That's why I say that they're good winners, but they're very, very rare to find. But they are almost definite winners. I notice most trades that I post using this setup or this method, I mean, it's almost like clockwork that it's going to come ITM, but you find it every now and then. It doesn't come that often. If you're a very conservative trader and you're checking your charts every now and then, I'm pretty sure that you'll run across it. And I'm also sure that if you see these oversold areas or overbought areas, that you may get it a little bit sooner than what you think. But this right here it's a really, really good strategy. I'm gonna be honest with you, this is probably the best strategy I will probably post on this YouTube channel out of any of these indicator lessons or videos. This is probably the best setup that I'll post. It's very rare. I know a lot of people don't have enough patience to want to use something like this, but very rare, very good. And if you use it on a 4-hour time frame, it's very useful for this too as well, as you guys can see. And 4-hour time frame, very useful, very useful. And on the daily time frame, because daily charts tends to be much smoother, you can use this for EODs. Even though it'll be much slower, you can still use it for EOD trades and stuff like that. So I still feel indifferent about exposing this to you guys, because anybody that asks me for my strategy or asks me for my strategies, whatever it may be, I almost always tell people no. And the real reason, I've talked about it in all my other videos, but the real reason why is because a lot of times people that want information, they're not just trying to use it for themselves. Because be honest with you, there's thousands of strategies out there that people can use. It's not always a strategy, it's the money managing and the system and all that kind of stuff like that. More so for me, I'm more so like thoughtful the fact that somebody may take a good strategy, that's something that they know to work, and then start charging people like $100-something a month and $200-something a month, and pretty much taking advantage of people that know nothing about trading or nothing about signals groups or whatever, taking advantage of those people for something that they weren't a maker of, and like pretty much like scamming people out of money when people can get similar to the same performance for a cheaper service. So like for me, it's always been about stopping scammers. Because I found that people are very scammy, and a lot of times scammers want a legitimate signal service, but they don't really want to put in the time and the work for it. They more so want something that they can take from somebody else and then overcharge people for stuff. Because I noticed that early on there were a lot of people when I first started my group up and trading and all that kind of stuff. There were a lot of people who used to come in there and steal my signals, and they will be reselling the same signals I was doing. They would be reselling them to people for like $100 a week, $200 a month, $500-something. Like, I mean, the prices was so astronomical that I was like, I am absolutely not teaching my strategy to anybody. And anybody I find out about it, they're getting blocked, instantly removed, the whole nine. And the people in their group, I'm gonna expose it to them too, so that those people can see that this person is false. So like when I started to encounter that, because actually, if you guys don't know, I used to do personal hands-on one-on-ones lessons when I was in Mike's group, and I would charge people a fee based off of how, like, I would work with them, you see what I'm saying, and I'll charge them a fee, and I would teach them my strategy from top down, how I trade, stuff that I'm looking at. But the thing is, I can't do it anymore. So my thing is, on only signals, and the stuff that I give off on my YouTube channel is free education for everybody. But you guys definitely are getting gems, because as you guys can see, this is a really, really good setup. It works very well. Also, the OSMA video that I did for you guys, where there's a strategy included with that too as well. It's not just a lesson, but it's a strategy included with that one. That one was a good video. So I mean, just to be honest with you guys, I think that you guys are getting the cream of the crop with this, and it's all for free. I don't mind giving it away for free, because I'm not up here exposing my whole system with all of my 40 indicators and stuff that I use. All this is just pretty much one indicator, and I'm pretty much showing you guys how effective it is, because this decision making right here, because it doesn't come up often, it can't be 80% of my decision making, but it would account for a large proportion of my decision making. Probably about a good 30% out of all my indicators. About a good 30% of this is used to figure out my setups, figure out what I want to do with the market, what kind of decisions I want to make, whether or not it's in an uptrend, whether or not it's in a downtrend. Looking for those crossovers and all that kind of stuff like that. So that's just something to keep in mind, man. But yeah, like I said, this is free. This is free. If you guys want to use demo, go try it out. I would highly suggest that. It's up to you. And also, too, guys, sorry for not making more videos this week. I wanted to make 3, but I only made 2 so far. I may make another one over the weekend. But I've been pretty busy lately. And then also, I've been coming down with like a cold, stuffy nose and all that kind of stuff. As you guys can see, I have this little, well, you can't see it, but I have a little nasal strap going across my nose. I know I probably look like a old school football player, but yeah, I haven't been able to make videos like I want. But even if I don't make that many videos, the ones that's already been made, they are very informational, very useful, and I know that you guys can make good use of it. So here you guys go. This is my gift to you all. This is a free strategy. I still feel bad about letting it out, because I just don't want people using it. I just don't want people being scammed, bro. Be honest with you. I honestly prefer to educate people on indicators and trading, and let them come up with their own systems that they like and use them their own self. Because mainly, I found that I became a better trader when I learned how to do things myself. I didn't just take what people told me to do and then try to, because everything doesn't work for you that works for somebody else. You have a totally different eye. You see things different. Your trading psychology and philosophy goes into your decision making, and in that trading psychology and philosophy, your decision making could be the cream of the crop of the profitability and the success of your system, to where somebody else's decision making could be a failure for your system. So what I would suggest, you always use what people give you as add-ons. If it is proven to work, you can use it as your main thing. But I will always say, you always want to learn how to make your own tweaks, do your own add-ons and all that kind of stuff like that, because people don't always thoroughly check when they're trading. And also too, like you guys been learning in the group from the secondary education from different people, markets change drastically all the time. We just experienced that during the summer. That's why us personally in my group, my signals group, we had to stretch the signals out, because markets have changed. So instead of us doing hour, 30 minutes, 15 minutes, 2-hour expires, we had to stretch it out to like 4 hours, 8 hours, 12 hours. You see what I'm saying? We're still getting profit, of course, is not as much, but you also won't lose as much too as well. So it's still a win-win. But the reality is that markets change drastically all the time, and knowing different indicators, this is why this educational course is so good. Knowing different indicators will help prepare you in different seasons. Like, I know if the markets is doing a whole bunch of volatility up and down, I can't really use trend indicators to trade that market, because a trend indicator is not really going to help me out. It's actually going to hurt me. So I will have to use something that gives me more of an idea of reversals, retracements, support, resistance areas, all that kind of stuff like that. But if the markets is trending very strongly, I can't really use stuff that's going to talk about reversals and maybe retracements, but not reversals. And I can't really use support and resistance areas that much, mainly because the markets is trending. So when you have a trending market, a support and resistance area doesn't mean much of anything. So that's just something to keep in mind, man. I hope you guys are enjoying the education. I know for a fact that you guys have enjoyed this free strategy, and I think I explained everything fully and nicely so that you guys can be able to comprehend it, understand it, apply it to your charts, and probably use it or get your feet wet with it, or add it to your system. I would suggest adding it to your system. Don't just take this bear, because there's other stuff that I use with this to give me better confirmation, and that's the reason probably why you can't use this to start a whole system with. So, well, some of you probably can. I don't know how smart you guys are, but yeah, a generic trader probably can't use this bareback alone. You do need a couple of other things to add on to it. I'm not gonna say what that is. So, this right here, this is good enough. This is sufficient, and if you're smart, if you know what you're doing training, you can make this into a beast. I mean, it's nice like that, seriously. But all right, guys, that's it for me today. Thank you guys for tuning in. Also, guys, for the feedback in the group, please keep giving the feedback, man. The discussions that we have, the feedback, I really like it. I want this group to be, I want the free signals, I mean, not the free signals, I want the free educational group to be interactive as possible. And to just have as many people in there as possible who just wants to learn about trading. Not that they're being broadcast and stuff, because every other educational group I'm in is very little education. It's a whole bunch of fighting against brokers and scams, and it's a whole bunch of promotion of signal services and to get money and stuff out of people. I want this to be as much education as I possibly can make it, and like I said, I want to make it at least about 95% education. So hope you guys enjoy. Tuned into Simple Forex Option. Please be vigilant traders. Make good decisions. Be very conservative. And remember, guys, it's all about patience. Professional traders, they're only looking to make 1 to 10% per month. So if you get that per month or per week or whatever it may be, you are okay. You are straight. If you're broke, if you don't have a lot of money, that's fine. You're getting the right win percentage, and that's what you should worry about. That 1 to 10% profit per month. If you can get that, you are just in line with that top 10% of traders who are successful and who are profitable. So I know a lot of you guys are looking to make a big bang or make a big amount of dollars very quickly. Please be mindful about that. Think twice about rushing into profits, because you can get grand profits very quickly, but you can also lose them very quickly. So, and I can tell you guys from experience, like I say, it's not worth it. You want to be as conservative as possible, because trading is for the long haul. You're not in there for 3 weeks, 4 weeks, 1 month. You're in there for 1 year, 2 years, 3 years. You see what I'm saying? If it take you a whole year, guys, hear me out on this. If you are a busy person, right, and it takes you a whole year to get a $500 balance, to get a $500 account up to like $5,000 to $10,000, you may not think that that's much, but in a year span, that's 100% to 100%. That's like 100% to 200% increase on your balance. Now, we have done months with that, and we have done months losing that, and that's why I say it's so significant to be conservative, because if you can get that within like a year or 6 months, 7 months, I mean, just taking your time, doing it slowly. If you can get it within that time, after that, it would be off to the races. Imagine you getting a 10% profit on a $10,000 balance. You see what I'm saying? When you put into perspective, a 10% per month, that's $1,000 per month, and you add that up over a span of 12 months, and you just continuously increase. Within like a couple of years, your money will be looking extravagant. Now, mind you, my personal goal is not 10% per month. I just feel like that's just very low and conservative. I like to keep in line with 15% per week or 60% per month. If I don't get that, I'm still content with getting percentage profits. But if I do, then that to me is the nail in the coffin. If I can get 60% per month. Now, we have blown that out of the water, and we've also lost that. But I mind you guys, with the amount that we risk, 60% is not really that hard to get. You see what I'm saying? So when you average it out over a month span, it's not that hard to get. So just keep that in mind, man. But I hope you guys enjoy. I'm tired of rambling on and holding you guys too long. I was not expecting this video to be this long, but I hope you guys enjoy. Please be smart, conservative traders, and stay vigilant in your trading. Also, give feedback on the video, anything that you learned new, anything that you want to learn or want to know about as far as indicators, and just let me know how you're liking the lesson videos. The feedback is very helpful for me because it keeps me motivated to do them. But all right, guys, thank you.